Good morning from our global headquarters in New York. I'm Menace Cranny. Welcome to Bloomberg Brief. Let's set that agenda.
Trump's tariff ambitions. The president floats 10% for China and warns Europe on treating the U.S. badly. Doubling the base with a boost from the NFL to Squidgame, Netflix surges on a record quarter. And it's day 2 in Davos with a host of interviews you don't want to miss from the president of Finland and State Bank of Indian chairman. Good morning, Menace.
Danny, good morning. We may be in a state of weaponized uncertainty on policy, but these stocks are flying higher as we have the birth of Stargate. More on that story on Oracle, SoftBank and OpenAI. And there's relief that we've not gone to max tariffs with China on day 2. 10% is what's floated. By the way, the Russell up for 6 days in a row, going into the 7th day up here. We're looking at that up nearly 6% in 6 days. Lower oil prices. Bank of America say the froth has come off these markets, bond markets. 456 is where you are. Gradualism, as they say, in terms of the tariff story on China. Maybe it's an appeasement to the vigilantes and listening to Scott Besson. Anyway, this market is not very long of bonds, by the way. Bank of America say we are net 20% underweight, the most since October 2022.
By the way, some huge moves in individual stocks, specifically Netflix, taking off more than 14% in the pre-market, Menace. They reported a record subscriber growth, 18.9 million new customers. That's in large part thanks to live sports events and the return of Squidgame.
Okay, got to queue up for that. Oracle surging as the company forms the AI pact with SoftBank and OpenAI. The initial investment, $100 billion. The scale-up, Danny, is to 500. That's the ambition.
ARM also rising on the back of that news of SoftBank's joint venture, along with NVIDIA and Microsoft in the big AI spend.
And coming up this hour, we're live to Davos. We speak to the Finland president, Alexander Stubb, and the State Bank of India chairman, C.S. Setty. Then in just a few moments, Seema Shah joins Danny and I from Principal Asset Management. So, look, I mean, it's like a flamethrower of risk, isn't it? I love this AI story. I haven't watched Squidgame yet. And I know I haven't. But I did watch some football on Christmas Day, to be fair.
I'm sorry, you haven't watched Squidgame, but you've watched... Who are you? What have you done with Menace Cranny watching football?
Transplant to America. Look, it is a flamethrower across this tech market this morning.
But it's amazing. It's not just tech, right? And it is in large part tech. Yeah. But it is a broad rally that's happening not just in the U.S., but Europe. The Europe Stock 600 reaching a new record. The DAX reaching a new record, too. There's maybe relief that on week 1 so far, we haven't got these broad tariffs yet. How long does that last?
And this goes back to the very principle of Scott Besson potentially being in one ear versus Howard Lutnick and other camps in the other. Right now, this is a policy of appeasement to the bond market. But listen to the conversations in Davos. You listen to the Norges Bank CEO, or the head there, saying he is still worried about a peak in these rates in the United States.
Yeah, there's an irony of everyone fretting about this in Davos. It's clear where the center of power has shifted. It's not Switzerland, it is D.C.
Well, the nexus of power is in the tech sector. Oracle, Microsoft, NVIDIA. NVIDIA will play into this in terms of supplying part of the gear that Stargate is going to need. This is the new AI deal, which... in many ways, Danny, as I say, it's a flamethrower over tech risk this morning. 10% tariffs is less than we thought. Let's get to Seema Shah. Seema, this AI podium deal that was announced yesterday, for me, it really sets the stage of further opening up the gap of U.S. exceptionalism when it comes to tech triumph.
Good morning, Menace. Yes, I would agree. I mean, I think what we're hearing at the moment is it's just reinforcing some of the narratives that were already in play. One being US exceptionalism, and the second, which is of course related, is this continued advance for the technology sector. When we're looking at AI, there may well be, of course, there are fluctuations, there are ups and downs, a couple of disappointments along the way. But this is a long-term move, and we're seeing more and more governments actually talking about, even the UK government really talking about the potential that they could gain from investing in AI. So this is a narrative which is going to continue to go on, and any countries that have got significant exposure to AI, specifically the US, for example, are really going to be key gainers, not just in the short term, but we think over the long term as well.
But Seema, as I mentioned to Menace, at the moment, it is a rising tide lifting all boats. For the past 6 sessions, 2 out of every 3 stocks in the S&P 500 has risen higher. That is a new record in this market. It's the broadening that so many people had called for. Do you think it's enduring?
Well, it's a good point, because look, I think the AI story is more of something which is a little bit more structural or strategic asset allocation perspectives contributing to that run in AI. what is lifting up small cap and some of the other sectors is quite tactical. It's really based at the moment on optimism that maybe Trump isn't going to move forward with the full length of tariffs that he had almost threatened a few weeks ago. But this is really, really early days. Now, if you were in the next few days, and we know from Trump 1.0 that announcement can come at any point, if you were to wake up to a headline suggesting that he's moving forward with the universal tariff or really moving forward with a 20-30% tariff for China, that's going to set markets back again. So I think for investors, it's important to keep in mind that just one day's move is not going to be reflective of what we can expect to see over the next year or so. And so it's really important to look for some of the fundamental themes that are going to drive markets that can mean that you can have gains for more than just 24, 48 hours.
Well, let's just talk about that, because one of the repricings has been in the bond markets, and the narrative is this, that DOGE, deregulation and energy independence, the trifecta that is set by Scott Bessent, will be the dominant over the potential for inflation from tariffs. Is that a sufficient narrative to be long of duration right now? Do you bank on that relative to the inflation risk?
I think it's a brave one. So I think that when we're looking at the fiscal story, we know that there is a desire to cut taxes. I think there's a certain correct reassurance that Scott Bessent is going to be a moderating voice, someone who really understands that there are major risks involved with, somewhat risky policy on the fiscal side. So that is reassuring. But the inflation story for us is a little bit more important in terms of the upside risks for the economy, for the global economy, is more on the inflation side. That's what we're most worried about. So from a duration perspective, 4.5%, where it is today, around that level, it's somewhere in that range. I don't feel strong enough at this point to start going overweight duration. And if anything, I think there's a little bit more opportunity on the short end of the yield curve.
But Seema, just to the point that you've been making in terms of, how do you operate in an environment where there seems like there are gains to be had in just 24 to 48 hours. A lot of the inflation story does matter on fiscal policy, on tariff policy, and we just get these market wiggles depending on what headlines come out. That seems to be the unforeseeable future, considering this uncertainty is more of a feature of Trump policy, not necessarily a bug. So what do you do when there is that kind of headline volatility? Do you need to stay close to the ground? Do you try to chase it? Do you have certain convictions that you tie yourself down to?
Yeah, look, this is going to be a really choppy trading environment for all investors, wherever you're based, and certainly whatever market you're looking at. What we're trying to align ourselves to at the moment is one of those key themes that we think are going to last throughout any of the volatility that we may see. So one of them is US exceptionalism. The Trump administration, for anything else that they're going to do, they're very keen on improving growth for the US. So we're not so worried about recession risk. So in that case, we're still risk on. That means being overweight equities, being overweight credit. And on the inflation side, because inflation, we do believe, is the key threat that the market will be tormented by almost for the duration of 2025, it means that you still have to have some exposure to inflation mitigation assets. That's going to be important, and there are considerable gains to be had there. And then on the other side is that, look, there is, as we've seen just today, that tariffs may not come to the extent that people have been worried about. It means that you do need to have global diversification. We do believe in US exceptionalism, but there are opportunities around the rest of the world. And the two key ones that we're looking at the moment is Japan and India. One of those reasons is because they are less vulnerable to the tariff threat from the US. And of course, we believe that they've got strong fundamentals from an economic perspective as well.
Well, one market that's trading higher this morning is Europe. Europe's at a record high. And I'm just curious, we're just looking at some of the Bank of America positioning. We flipped from being underweight before Christmas to a net overweight of 26%. Now, we haven't seen that kind of pivot for a while. Two of the tail risks that everybody tells us is China could get it right and Europe could be rehabilitated. If it is incremental tariffs, that's a boost to the narrative for being long of a tail risk of Europe, is it?
Yeah, absolutely. And I think what investors are looking at, though, which is correct, is that because valuations in Europe are so cheap, you don't need to have a major positive surprise. You just need a bit of a positive surprise, and you can get some significant upside to European equities. The question for us, though, is that how long can that be maintained? To us, the fundamental story for Europe is still quite worrisome. We're worried about the growth prospects. We worry about the inflation. We worry about whether or not the ECB will really be able to avoid recession for the bloc this year. So from our perspective, there could be some upside days, weeks, even a month or two, but whether or not it's going to last, over a full 9-12-month period, I think is a little bit more questionable.
Yeah, the bar is low, perhaps with good reason. Seema, thank you so much for joining us this morning. Seema Shah of Principal Asset Management. Coming up on the show, we're going to take you back to Davos for an interview with the president of Finland. That's coming up. You don't want to miss it. Stay with us here on Your Brief. It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. And Manus, I think you put it really well, a flamethrower across risk. You have a couple things happening. One, you have AI, the dominance of which of more investment coming into the U.S. You have Netflix earning and a really broad equity market rally, too. It's not just the U.S. where the breath is looking really positive. It's Europe as well at an all-time record.
Which Seema Shah actually just not poo-pooed, but she said, look, you might get a couple of weeks, you might get a month of this euphoria in Europe, but she doubts the capacity to sustain. Recession is a real risk, and the ECB are going to have to do more.
Well, let's get to some of those topics and head over to Davos. Bloomberg's Stephanie Flanders is sitting down with the president of Finland, Alexander Stubb. Stephanie?
Thank you so much, and thank you, Mr. President, for joining us. Let me get straight to the question of the underground cables that have been ripped up by ship anchors several times in the last 15 months. You think that's sabotage?
Well, I mean, we attribute when we know exactly what's happened. So we've had 3 of these cases in the past year. First time, we let the ship go. I think that was a mistake. Second time, it was in Swedish-German waters. They boarded. And third time, we actually confiscated. The investigations are still ongoing, and there are always a couple of options. One is sabotage, and the other one is mistake, and the third one is incompetence.
Do you have evidence for sabotage?
Well, our investigation is still ongoing, so we can't really take a stand on that. But the bottom line is that it doesn't really matter who does it. The most important thing is that we're able to prevent it, and if we're not able to prevent it, that we can actually correct it very quickly. Now, of course, we have a Baltic Sentry operation in the Baltic Sea, so I think our situation picture is better than what it used to be, and we're able to deal with it, and I think the Finnish model actually works.
You have said, as you said, that when you find the culprit, you'll attribute it, but that hasn't happened.
No, not yet. We're very much a rule of law-based society, so we have a criminal investigation, and once that is finished, then we draw our conclusions.
And you think that you're confident that the naval drones that you've now agreed would patrol the Baltic will be enough to prevent this?
You can never prevent to be 100% sure, but you need to have some kind of a model. And our model is very clear. It was the private sector that told after an hour that the cable had been cut. Our authorities then identified one of 2 ships that it could have been. They went on top of the other one and moved it to our waters, and the rest followed. So, you can't prevent every case, but because we are now controlling the shadow fleet better, because we have better underwater infrastructure, because we can actually deal with different operations, I think we're much better at it.
How would you, if you do find evidence of sabotage, and you name the culprit, what would you expect to be the further ramifications of that? Do you consider it to be an aggressive act by another country?
No, actually, for us, it's then a deterrent that it wouldn't happen again, because it's not in the interest of anyone. You have to understand that the Baltic Sea is a small sea. It takes about 30 years for a drop of water to come in and out. That means that there are 2 issues there. One are the underwater cables and the critical infrastructure. The other one is an environmental catastrophe, and it's not in the interest of Russia or anyone else to have an environmental catastrophe. The big problem we have now is that they are basically transporting this sanctioned oil on ships that are not good. They're old, they're decrepit, and the rest of it. So this risks the environmental catastrophe more, so we have to deal with it.
Obviously, President Trump is now back in office, and in recent weeks he's made comments about not ruling out military action to take control of Greenland and other areas. What's your response to that?
Well, I think the response is that in foreign policy you have to deal with things case by case, right? So we all understand that Trump has changed American foreign policy, and it's more transactional. We deal with that. And of course, we look at it from 2 tracks. One track is our own, what is in Finland's interests. A country like Finland produces 60% of the world's icebreakers. The alliance needs 70 to 90 icebreakers. Is there a deal to be made there? Actually, it was Donald Trump's idea originally to do something on icebreakers. And the other track that we look at is, of course, our Nordic track and EU track and international law track. I come from a small country. For me, it's very important 3 principles are met. 1, independence of a nation state. 2, sovereignty of a nation state. And 3, territorial integrity of a nation state.
Well, those principles, do you think that Donald Trump is, given his past record, you say it's case by case, but looking at his past record, he's someone who in any number of realms has ignored very long-established norms. Do you expect him to respect those principles of the integrity of national borders and sovereignty?
Well, I hope it is in the interest and in the value base of the United States to do that. You have to remember that there are 2 things in my mind from a European security perspective that drives Donald Trump and his administration. One is peace. He wants to make peace. He did it in the Middle East. He wants to do it in Ukraine. And in order to do that, you need alliances. You need some kind of rules. And the other one is that the U.S. wants to retain its position as a superpower. If you want to be a superpower, you have to have allies. And the closest allies, about 25% of the world's countries, they come from Europe. And I'm sure that our transatlantic partnership will be strong even after these 4 years.
You have, in your previous career, you've thought very deeply about NATO, about European defence. I think many people would say that the first Trump administration actually had a constructive impact on NATO.
Very much so.
And I just wondered how you think, how should NATO and European members of NATO respond and make the most out of this second Trump administration?
Yeah. Listen to what Trump has to say. He was right originally when he said that Europeans are not taking care of their defense enough. He was right in saying that we're not using enough for our defense expenditure. I'm not speaking for Finland because we're up at 2.4, 2.5%. We have one of the largest militaries in Europe, and we actually buy American military material.
You're not at 5%, though.
We're not at 5%. The United States is not at 5% either. So the fact that he's pushing us to do more on our own, I think, is a good thing. So what I want to say is that listen to what President Trump has to say and act accordingly. A country like Finland will certainly do that.
Do you think people talk about stretch targets? Do you think 5% is a useful stretch target? Is it even useful to talk about it?
Instead of looking at the percentages, look at what you have. So I think it's very important that you have a strong Air Force, you have a strong Navy, and you have strong land forces. And then you have the military capacity, air, land, and sea, long-range missiles, F-18s, F-35s, artillery, and the rest of it. So kind of you have to put your money where your mouth is, in a sense that it's not the percentage that counts, it's the stuff that you have. One example, the US has something like 30, 34 different military systems. Europe has over 170. There's a lot of rationing to be done there.
We're also coming up to 3 years on the war in Ukraine. How do you think it should end? What would you expect over the next few months?
Well, I think it obviously should end first in a ceasefire and then a peace agreement. And I think that peace agreement needs to respect at least 3 principles. One is the independence of Ukraine. 2 is the sovereignty of Ukraine. In other words, its right to decide whether it wants to be in the EU and or NATO. And thirdly, it needs to respect the territorial integrity of Ukraine. And I think Trump has a huge role to play here. And in many ways, a Ukrainian victory is an American and a Trumpian victory.
You've talked about China actually potentially playing a key role in ending the dispute. Some people think that will be Trump's role, is to pick up the phone to President Xi. What role can China play?
There's an interesting connection here, and we already saw that. I think President Trump spoke with President Xi Jinping on Saturday, and I spent 3.5 hours with President Xi Jinping in October at a state visit. And my message is that China has influence on Russia. So if there's a connection between President Xi and President Trump on, yes, we need to muster a peace deal, I think it's pretty much the job of President Xi to convince Putin time to do a deal. And then it's the job of Donald Trump to find a deal which is fair, just, and where there's no peace without Ukraine or no peace without Europe.
President Alexander Stubb, thank you very much for joining us. Back to you, Manos.
Thank you very much, Stephanie Flanders, Bloomberg Head of Economics and Government. Good to see you today. More to come from Davos throughout the week. And don't miss our exclusive interview with the Ukrainian President Volodymyr Zelensky. That is at 10 a.m. Eastern. Other stories trending on your Bloomberg terminal. This is what we've got for you. President Xi Jinping and President Putin held a video call the day after President Trump's inauguration to discuss bilateral relations responding to external uncertainties. It was reported that both China and Russia are also open to dialogue with Trump on the war in Ukraine if appropriate signals come from Washington.
Google is backing AI developer Philanthropic with another $1 billion. It becomes one of the most promising rivals to OpenAI. The San Francisco-based company is perhaps best known for its family of large language models, which compete with ChatGPT. Anthropic declined to comment, and a Google spokesperson did not immediately respond to a request for comment.
Well, Netflix ended the year with a bang. The company's biggest quarterly subscriber gain in history boosted its first major live sporting events and the return of Squidgame. The streamer added nearly 19 million customers, which was more than double what Wall Street expected, and brought the global subscribers at Netflix to more than 300 million. Let's talk a little bit more about that. It was a blowout quarter. Charlie Wells has been tracking the numbers from Netflix. I mean, this was blowout, and they managed to raise prices. Charlie, good morning.
Good morning, Manus. I mean, the question here is, how do they keep it going? This was such a blowout, as you said, that I think momentum is the real question here. And when you look at that shareholder from yesterday, that shareholder letter, from yesterday, you'll see a term in there that really speaks to the forward plan. And it is not a word, but it is eventize. Now, I looked that up in the Webster's dictionary, and it is not there. If it's not a word, it certainly is a business plan. And what we see is these marquee events, these events like a boxing match back in November with Mike Tyson, they drive subscribers, and that is something that this business is going to want to focus on in particular, but they also provide that captive audience that advertisers love. And Netflix is plunging headlong into advertising. They're trying to build out that business. They want to get enough scale to please advertisers by the end of this year. So it's these events that provide content. They bring in subscribers. They bring in record numbers of subscriber growth, but they also help that advertising business.
Elsewhere in the world of tech, Charlie, Dan Ives is talking about this new AI announcement that's been made between SoftBank, OpenAI, and Oracle in conjunction with President Trump, saying it heralds a new era of AI spend in America. There's already been a whole heck of a lot of it. How does this so-called Stargate change things up?
Danny, I mean, AI and Trump have a lot in common in that there's a lot of words, but investors really need to parse into what is actually changing here. And when you look at this Stargate announcement, you know, it's a $100 billion investment bringing together OpenAI, Oracle, and SoftBank. They're going to invest in critical AI infrastructure. We've heard a lot about this. Now, what actually changes here are two things. On one front, you got Trump talking about deregulation on the AI side. He is rolling back some of these Biden-era safety regulations on AI. He's going to use executive actions and some presidential powers to speed up some of these construction projects and bring in energy as well. But you also get the coordination here, and that is really crucial for AI. You've got all of these companies coming together with government because what AI companies say that they need chips, they need energy, and they need data centers. Now, those data centers use as much energy as some cities, so that coordination piece is really important. So what you're seeing here from at least that announcement is deregulation and coordination.
Yep, a lot of spend's going to be necessary on energy. Charlie, thank you so much. Bloomberg's Charlie Wells. Coming up, President Trump widens his tariff threat beyond the Americas. We're going to have more on that next on your Bloomberg Brief. From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger and Manus Cranny here. Let's set your agenda.
Trump's tariff ambitions. The president floats 10% for China and warns Europe on treating the U.S. badly. Doubling the base with a boost from NFL and Squidgame. Netflix surges on a record quarter. And Davos is in full swing. Don't miss our live interview with the State Bank of India's chair, C.S. Setty. That's coming up in just a moment. Danny, good morning. A flamethrower for wrist. That's my phrase of the day.
I love it. It's very evocative. But it's also added not just tech, but maybe a relief of concrete tariffs. Yes, he's adding in the countries day by day that he wants to add tariffs to, but we don't have exact legislation yet. S&P 500 closes above 6,000 for the first time this year yesterday. We continue to move higher. It is the NASDAQ 100 leading us higher, thanks in part to insane numbers for Netflix. I mean, hard hard to really underscore how good they looked. We're up 14% in the pre-market for them. Russell 2000, that takes a breather after 6 days of advancing. Your 10-year yield, that closed below 4.6%. It's a very benign environment that we've been in, despite all the concerns about inflation to come. I mean, Manis, we were just speaking with Seema Shah, who said that she sees inflation is here on its way. We've gotten that commentary over and over again, but it has been relief in these bond markets. And again, maybe that comes back to the fact we expected really aggressive day one action for Trump. Maybe that was overblown. We haven't gotten it yet.
But Seema Shah, just one example of not convinced that you can assess the whole, not first 100 days, but this is day 3. You cannot step back and say, oh, it's gradualism of 10% on China, Europe, you're in my sight line, because the risk is this. It could be like death of 1,000 cuts. You start at 10%. Yes, it's gradualism, but it's, where's the end of that journey? And what have you got to do to get off the runway, which President Trump is firmly at the bottom of the runway with a hand on that throttle?
Wow, the metaphors are
Potent imagery this morning.
Really good this morning. I thought Seema Shah was also really brilliant on Europe. Everyone's been talking about this idea that the bar is so low, and that's part of what we've gotten. We've gotten a rally in Europe that's taken us to a new record in the Europe Stock 600. The bar is low for a reason. Yeah. Growth looks poor there, and again, Trump yesterday saying Europe treats us very badly. They are in my sight for tariffs.
And this comes down to positioning. The market is not positioned for this long move in the bonds. That's an underweight position, so very few people have got that tailwind. And in terms of Europe, they flipped from net short over to long. But for how long will that endure? I mean, that's a minuscule move, but it just shows you that there's a shift in the intention.
And again, what comes from the White House might be the thing that determines this. It is day 2 of President Trump's second term in office. He has continued to issue tariff threats, nothing concrete yet. But speaking at a White House event, the president put China and Europe this time in his crosshairs.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
Joining us now is Bloomberg's Megan Crane in Washington, D.C., a very cold and snowy Washington, D.C. Megan, great to see you this morning. 10% tariffs on China. We had heard a campaigning President-elect Trump talk about as much as 60%. What do we make of the new numbers being thrown around?
Good morning. Yeah, so the numbers are unclear. A lot of what Donald Trump says is sort of putting ideas out there and floating balloons as to what will sort of get the momentum in the way that he wants it to be. None of his executive orders yet have actually imposed any tariffs. He requested a review that isn't actually due until April 1st. So that's actually quite a lot of time for him to throw out different numbers and sort of see how people react, how countries react and markets react.
Well, the other big issue is, of course, immigration. The troops have been deployed to the border. Immigration raids already having some consequences in New York, LA, and Chicago. What are we actually seeing on the ground?
Right. So there hasn't been a lot of raids that we have seen. Our immigration reporter told me yesterday that we would expect to see them in the morning. Just sort of that's the practice. And we don't have footage of that from yesterday, so it could happen again today. It seems like one of those things that the Trump administration is focused on threats, and that is working, right? People are staying home and not working and not going into immigrant-heavy neighborhoods in Chicago, Los Angeles, like you talked about. We do have, we have reporting that shows that people are afraid.
Yeah, and again, this is one of the big macro risks, too, of do you actually have people, mass deportations out of this country, and what does that do to the labor market? Megan, elsewhere, right. TikTok ever present in the president's talk. And he's continued about talking about TikTok, this idea of he wants at least 50% owned by the U.S. The groups emerging are kind of interesting. Musk, Larry Ellison, Mr. Beast, Pam Bondi's brother. I honestly, I don't know what to make of it. I mean, how is this sort of evolving? And is China really okay with these types of groups being the one to buy operations from ByteDance?
Yeah, I mean, that's a really great question, right? I mean, as far as I understand, they're still saying that TikTok's not for sale. So, how that's going to play out and who ends up winning that, battle, it looks like, in order to keep operating in the States, they'll have to find some new management. And whether it's Mr. Beast or a different, tech entrepreneur, Musk would face, monopoly problems, having already owning Twitter. So that now X. So that, it's one of those many things in the Trump administration that's just unclear how it's going to move going forward.
Well, there's certainly an interesting beauty parade of bidders in the wings. Megan, thank you very much. Megan Crane in Washington. It is Davos. Let's get back to the hillside. Bloomberg's Francine Lacroix is speaking now with a panel about whether financial systems can withstand the next crisis. Let's listen in.
The financial system has been fairly resilient. Has proven to be fairly resilient. There's a little bit of unfinished business, I think, in the non-bank sphere, but at least the banks as core of the financial system have weathered the recent turmoil quite well. And I mentioned that point because also in terms of thinking about future shocks, I would emphasize more the resilience part than trying to predict where the shock is going to come from. We live in a world of fundamental uncertainty. Knightian uncertainty, Raghu would probably say, coming from Chicago. But that means that we financial regulators and also bank risk managements, they like, of course, much more quantitative risk distribution with a given set of shocks where you assign probabilities. Unfortunately, that is not what has created most havoc in the financial system. These were more forms of unpredictable uncertainties, unknown unknowns, as you wish. And given that that is so difficult, I think our emphasis should be, and continue to be, building resilience within the system, even if you don't know where exactly the shock will be coming from. There are enough things to worry about. Geoeconomic, geopolitical fragmentation in and of itself may have disruptive consequences on financial markets, may have some impact on our capacity to work together internationally if there is a problem popping up somewhere in the financial system. New technologies of which are very promising, I think, in terms of their business opportunities, but which may also contain additional forms of interconnectedness in the financial system over and above the traditional forms of interconnectedness. Well, a little bit of that.
Yeah, there's a lot of uncertainty out there, right? And I take your point, Professor Rajan, to what Governor Knut is saying, that actually we've been very bad at predicting any kind of financial crisis. But if we try and see what the hotspots of tomorrow could be, where's the uncertainty?
So I think I agree entirely with Klaus. We can't predict, but we can try and make sure the system is resilient. And so look at the system and see where the weak spots might be building up. I think whenever you look at a financial system, you talk about two things with great importance. One is solvency, which also means leverage, and the second is liquidity. I think we understand solvency reasonably well. It's the liquidity part, which is something which is behind the scenes, which is part of the plumbing. And what we're seeing increasingly, especially with what is happening with the greater focus on U.S. markets, U.S. markets now 65% of global equity markets, but lots of capital flows, maybe with the deregulation even more going into the U.S. The center of liquidity is the Federal Reserve. And you have to ask, is the Federal Reserve going to step up every time there is a problem? Look at what's already happened. We saw in the global financial crisis, the Federal Reserve balance sheet went from 50 billion to 2.8 trillion, okay? Then it came down, but it couldn't come down all the way. At 1.5 trillion, it backed up again in September 2019. Fed came back in. Again, it started trying to reduce its balance sheet. It backed up this time in March 2023 at 3 trillion. The question is, the Fed is supporting the US system, but now increasingly it's going to support a global system. And the question is, what are the gaps? Can it bridge the gaps? So think, for example, what happened in March 2023. It could not support, the system itself could not support the small and medium banks. The Fed had to come in to support them directly. What about internationally? What about stable coins? Are they going to be in the system or out of the system? Who's going to support them? These are the kinds of things we need to examine going forward, because this is where the problems might arise.
Right. Susan?
I want to bring two additional perspectives to the discussion. The first is going back to your point on the events of March 2023. One of the unintended consequences of those events was small businesses, because two things were true about small business. One was liquidity was concentrated in the big banks. And the second was that as a result of that concentration, many of those small businesses were single-threaded. They literally couldn't make payroll. they couldn't get supply chain payments, and they couldn't get to consumers. So as we think more about what happens to build resilience, that constituent needs to be thought of in the same way as we think about many of the underserved communities. The second point on resilience is, for me, what I remain optimistic about, and I agree, predicting the next shock is hard. But here's what we've seen if you go back in time. We've seen that any time there is friction, friction is the path to innovation. And if you look at the innovations that have come from financial constraints, open banking is a great example. The fact that half the world now moves digital money in a wallet of some sort, again brought by financial constraints because so many digital wallets come from local payment systems. They're not interoperable globally, but that allows people to transact digitally. And if you build onto that, where we are with Gen AI, and the things that have advanced very important things to financial systems, especially in commerce, which is understanding the identity of both the seller and the buyer, there is so much innovation that has come from constraint. Now, is that enough? No. But it certainly forebodes that as the world gets more unstable, we're likely to see more innovation.
Lim Cho-Kiat, do you worry that actually in this America First policy, the rest of the world will have to figure out by themselves financial stability, how to support markets and liquidity?
Right. Well, fracturing risk is certainly a big one. But maybe I could just offer two angles. First, just look at what happened over the last couple of years, which we have experienced very stable financial system. Right? I think it's largely due to the starting conditions. That credit cycle was benign. As we entered, let's say 5 years ago, even with the COVID, and you got a lot of fiscal support through that period. And I would also give credit to central banks for arresting the spiking inflation. And then going forward, the way we looked at it, the angle is that there are three things that you want to be careful about. First is to be clear about the fragilities in the system. I mean, these are things like illiquidity, leverage, and concentration. That's the first thing. The second, of course, is negative shock. Hard to predict, right? But you could imagine things like credit cycle turning down. There's a little bit of sign of that now, with the fiscal money running out. You could imagine a recession down the road. That's a negative
We're just
shock.
hearing there from the GIC CEO, the Singaporean Sovereign Wealth Fund, Lim Cho-Kiat, one of many panelists on Bloomberg's Francine Lacqua's panel, speaking about the potential for another financial crisis. If you want to catch the rest of that panel, including Klaus Connaught and Sergio Amati and others, live go on your terminal is where you want to head. Coming up, we head back to the Swiss Alps, our live interview with the chair of the State Bank of India. That's coming up next on Bloomberg Brief. Good morning. You're watching Bloomberg Brief. Let's head back to the World Economic Forum, where Bloomberg's Haslinda Aman is sitting down with the chairman of the State Bank of India. Haz, over to you.
And Danny, the State Bank of India is the largest lender in the country. Its results are a bellwether for India's economy. Thank you so much for joining us, Mr. Setty. We're talking about an economy that's slowed down from about 8% to about 6% and change. Is that a blip, or is the economy about to pick up again?
First of all, thanks for having me on this show. Among the major economies, India continues to be a good story. And my personal view and our house view is that whatever witnessed in the last 2 quarters would be a blip. The long-term story of Indian economy is intact. And I think the current financial year, of course, the growth rate advanced estimate places around 6.4 to 6.5%. It is obviously the country is looking for higher growth rates. But when you juxtapose it against, and the global economic backdrop of 3.2% growth rate, it still is a significant growth rate in our view.
Well, the thing is, consumption remains lackluster, both urban and rural. How is that impacting your strategy, especially your retail portfolio?
The retail portfolio is still doing well. In the overall banking industry in India, one thing, the rural-urban consumption is the division between rural-urban consumption is going away. That's a good part, right? So the rural consumption is increasing, while the growth rates could be temporarily, slowed down. The important element to note is that the rural and urban consumption are almost converging in terms of the levels of consumption. It's a good story. As far as the retail personal loans is concerned, obviously there was some concern about unsecured personal loans, which is slowing down. It's reaching a comfort zone for the regulator. But the home loans is a good story in India. And we see that among the personal loans, the home loan are having a robust growth rate. And the credit growth broadly would be stabilizing around 12 to 13% is our estimate for the banking industry.
Let's talk about risk. Do you see risk coming from the second Trump administration? We know that there are issues when it comes to tech, for instance. India's economy might be impacted. Might that have trickle-down effect? And add to that, of course, we have the Indian rupee trading at close to record lows.
So obviously, the yield movement in the developed economies had resulted in outward flows, which is definitely putting pressure on the central bank in India to relook at, what should be the rate cut in the ensuing February monetary policy. Our assessment is that probably they may have to take a call on the rate cut. This would stem the flows, hopefully, and help the market to. If you have noticed that, despite a strong outflows on the FPI side, the domestic inflows are significant in India now. While the market is impacted by, many decisions with the change of presidency in the US, there is some uncertainty in terms of how it is going to impact India. Our assessment is that there are a lot of things India is getting it right, in the sense that, we have diversified our export base and diversified both in terms of the products, in terms of the markets, which means that even if there is unlikely event of any tariff action against India, I don't think India is going to be impacted badly. But we need to be watchful what is going to happen in case of any tariff on the China is imposed and what happens to the Chinese production getting diverted to other countries.
The caution is the word. Mr. Setty, we thank you so much for your time.
Right.
See Setty there, joining us here in Davos. Of course, he's chair of the State Bank of India. Manis, handing it back to you.
Haslinda, thank you very much. Great to see you. Haslinda Aman there in Davos. Coming up, earnings and a Treasury auction for you. All on deck. Context Matters on Bloomberg.
It's your Bloomberg Brief with Danny Berger and Manish Cranny in New York. Let's get you set up for your trading day on this Wednesday. We're going to get some earnings. Those include Johnson & Johnson and Procter & Gamble. Both of those will hit before the bell. 10 a.m. Eastern, ECB President Lagarde will be speaking at Davos. Plus, we are going to get a Treasury auction, $13 billion in what's usually a kind of unloved 20-year bills. That auction will come at 1 p.m. Manis, what you got for those stocks?
Danny, let's kick it off with Netflix. They're extending their rally after posting a record in the fourth quarter and raising prices. Did you watch Squidgame? We can have that conversation in a moment. United Airlines up 3.64%, a comfortable beat on the earnings, and they see profit rebound as the airlines buck those winter doldrums. Orica, I mean, what an amazing performance. Larry Ellison, talk about connection to power. This is joining up with SoftBank and OpenAI in a pact to deliver AI for the future for America. It starts at $100 billion and scales up potentially to $500 billion. Danny.
And let us not forget that Larry Ellison is also one of the names being floated as someone who might be a person that buys a stake in TikTok. It does go to the story of proximity to power, what it's meant for some of these tech names. And we've kind of joked on the show before, talking to different investors, saying, do you want to kind of look at the dais behind Trump and see what executives are and buy their stock? It kind of has been a strategy that has worked thus far.
Look, absolutely. I mean, this mission, this new AI mission is called Stargate. And the question is, you know, what does it do to U.S. exceptionalism in the AI space? Or is it another major balloon of policy that maybe doesn't fully manifest itself? We saw that a couple of times before, but this sounds pretty real with serious intent and serious money from Mayoshi-san in terms of being responsible. And then you got all the chip makers, boom, boom, boom as well. ARM, Microsoft, and NVIDIA. Sorry, not Microsoft, NVIDIA. All trading higher this morning.
Look, it also goes back to kind of what we've been hearing in Davos, the enthusiasm from all these different banks saying that we're going to get bigger, that the environment is really good. But this is the thing, it is just the animal spirits at this moment. It is just announcements at this moment. You need to see actually what the follow through is and make sure that that follow through isn't also met by tariffs and inflation. It's two different sides to the same coin.
It also depends. I mean, at the moment, it's incremental and gradual tariffs, 10% for China. Europe, you've been very, very bad. We don't quite know what we're going to lobby at you, but you've been very, very bad. And the question is it a death of 1,000 cuts that the Fed has got to consider or something much more significant? And that's the conversation in Davos from Norges Bank. They're worried about the bond market blowing out.
Well, that's it for us. Surveillance is live in Davos. They will take it from here.